You know me. I'm a gigantic believer in the humanization of pets, the thesis that we're treating companion animals more and more like members of the family, which means we need to buy them better food, treat them better health care. But some of these humanization of pet stocks have been more controversial than others. Why don't you take a company called PetIQ, which makes veterinary products, think over-the-counter flea and tick preventatives, to prescription drugs, to health and wellness stuff. On top of that, the company also runs its very own veterinary clinics. Thanks to a recent acquisition, management believes that they can ultimately open 1,000 stores in the United States. It's been a volatile year for PetIQ, by the way. That's PETQ for the home gamers. In March, the company reported a fabulous quarter, and the stock roared. Then in late April, PetIQ was savaged by a short seller who publicly attacked the company, managed to chop 20% off of its market cap instantly. It was brutal. Fortunately, it didn't take long for the company to report another great quarter, and since then, the stock has been on a roll, even if it did get dinged pretty hard during the recent sell-off. Last night, PetIQ reported again, and once again, they knocked it out of the park, earning 70 cents a share. People only looking for 35 cents. Talk about a gigantic beat, right? Substantially higher than anticipated revenues. Stock surged higher at the open, but then it ended up giving up most of its gains. The whole market took off. Investors swapped into other names. I think that's a mistake. Don't take it from me. Let's check in with Cord Christensen, the chairman and CEO of PetIQ, to hear more about the quarter and where his company is headed. Mr. Christensen, welcome back to Mad Money.
Hey, Jim. Thank you for having me on today.
All right.
Good to be here.
Cord, I'm looking at the Connect and Leverage product and services chart in your PetIQ deck. There we got Amazon, we got Google, we got YouTube, Walmart, Target, Tractor Supply, which I've been to use that myself. I mean, you kind of got everybody locked up, don't you?
Yeah, we're really doing business with everyone, and we've been able to really take our mission to the market, and the market's been extremely receptive. Our partnerships with our retailers has allowed us to access a huge population of pets out there, and it's allowed us to bring our mission forward of being advocates for those pet parents and helping them find ways to save money on both their products and the services they need to provide better health care. And ultimately, we're bringing thousands and thousands, even millions of pets into the category that haven't been getting proper health care. So we're really excited how the mission is moving forward. And we obviously love the fact that the numbers continue to show quarter after quarter that it's working.
Well, let's talk about the wellness centers, because it's something I'm involved in. And I read that and I said, okay, well, tell me, how does PetIQ, one wellness center is the same as another? What are you doing differently?
I think the biggest thing we focus on is we're incredibly transparent with our model and what we charge and what we're doing with the pet owner. The pet owner is involved in really choosing their wellness pattern, and ultimately we're matching up the most benefit we can provide for the pet for what they can afford, which I think is a little bit different and not as intimidating. And so the user experiencing leaving our clinics is extremely positive because they know they had an honest, transparent, great experience, and ultimately they tell their friends, and then they come back and their pets come back. And so it's something where our average ticket is running less than $100 to take care of your pet's health and wellness needs, which means it's extremely affordable for us to help people take care of their pets in a better way.
Now, I think both because of the humanization of pets and also because it's cash pay, I see veterinary clinics opening up all over the place. Now, that's just maybe in my area, but is there room for another 1,000 by PetIQ if a lot of doctors are going into it knowing that it's an incredibly lucrative business because it's cash?
Yeah, like there's a lot of clinics out there, but there's a ton of pets that aren't seeing the veterinarian, and there's a ton of ways you're going to go reach those pets. We think our model is different because we locate our clinics inside of major retailers, and those major retailers today represent virtually 90% of all the calories that pets consume in this country. And so we put the clinics where the pets are. We call it our Follow the Pets mission, and where we're allowing the services to be where they already are. And ultimately, we already have 3,500 stores we run community clinics in today. Those services are the same, but we only run a day a week in those environments. And all we really are doing now is taking that community clinic concept and doing it 5 days a week, and we call it a wellness center. And that wellness center allows us to be more accessible and more available for more pets in that area. So it's definitely working.
Okay, now I recently interviewed the CEO of Chewy, and you go around, you see a lot of Chewy boxes and UPS getting out there. Enough room, Chewy, good competitor, right?
Chewy actually today is one of our strategic partners, and we do a significant amount of business with Chewy. So we're aligned to drive the same mission. They want to see pets get better health care. Their recent prescription drug launch allowed them to help get that mission further pushed out to the market. And it's been a huge benefit actually to our company and been part of the reason why our numbers are so significantly over this past quarter.
All right, so let me understand this, because I want to be sure, because when I looked into it, I did not see Chewy on your deck. So that's why I was confused. I admit, wish I'd known that. But I want to understand. I mean, they affiliated with you. You, as they go up, you go up, and it's a significant delta for your company.
Significant delta. We've been involved with Chewy since organizing the launch of their prescription drug program and been strategically involved in helping provide product to them. And then obviously we are looking at smarter ways to educate their customer base, how to find our clinics and do things that help us all just move the mission forward. We all want the same thing: better healthcare, better products, more pets being treated.
And how about the Perigo acquisition? How's that going for you?
You know, we're 30 days today, and it's been fantastic. The first 30 days have been very enlightening as we've been able to philosophically align with the team, get them integrated into how we do business, take our combined message out to the market, and we definitely see this acquisition as accretive to the company. We've been able to, first pick up a margin profile that's significantly better for our product base, so it's accretive to the margins of the company. We see tons of white space with our focus and our leverage across what we do to drive additional placement and sales volume. And then obviously we picked up a significant asset with the manufacturing facility they have in Omaha, Nebraska, which is what I believe is the best product manufacturing for health and wellness in the country.
Okay, one last question. You said that you could have 15% growth. Was Perigo doing any of, I don't think they were doing anywhere near that kind of growth for that division, right?
No, we've been competitors for a long time. In the last 3 years, we've done a really nice job of impacting their growth, and it's obviously, you've seen it on our side, the growth coming that way. As we've looked into the combined company, we definitely believe we can put them on a place to be growing at 15% year over year on their base with, like I said, a very nice margin profile on that 15%.
Terrific. All right. Well, look, I think the story's a good one. Didn't understand the action, frankly, after, because it seems like a great buy. You got fabulous growth. I want to thank Cord Christensen, Chairman and CEO of PetIQ. Thank you so much, sir.
Thank you, Jim.
These guys have a lot of the channels locked up. That sounds pretty promising to me, and yet the stock didn't pop after a great quarter. That seems wrong to me. Mad Money's back in.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.